Hello and welcome from me, Curtis Hutchinson and Philip Nothard, to this special Motor Trade Radio weekday episode looking at the monthly trade values and trends from CAP HPI. Now, with Darren Martin on holiday, we're delighted to welcome back to the podcast Jeremy Yea, Senior Valuations Editor at CAP HPI. Welcome back to the show, Jeremy.
Morning, Curtis. Yeah, thank you for having me. It's great to be back on.
Good. Yeah, you're welcome, Jeremy. And it's Darren's obviously away again. Little Judith there, he gets more holidays than anybody else, don't you? I think. But
I'm the July substitute.
We should know, but no. Thanks for this, Jeremy, and it's always a pleasure having you on. And I know you do enjoy it, really. But it's great to have you back on. So, with August editorial now looking at July, that will be published Wednesday the 27th if you're listening on demand, or published this morning if you are listening to us live this morning, then can you bring us up to date with the headlines at the 3-year 60 figure that July finished on, and your overview of how this fits in terms of the year to date so far?
Yeah, sure. So our headline move for July into August booked for August publication monthly. The 3-year 60 point across all sectors is down 0.2%, which is, in monetary terms, it's just a tenner, so fairly negligible, I would say, overall. It's actually the second smallest movement of the year. January into February was a flat book, so it is our second smallest move of the year. And it's actually our lowest July into August move since we introduced Cap Live back in 2012. The average move taken out the COVID years is actually down 1.1. So as you can see, this is a very, very strong month considering the average moves in previous years. We feel it's just a very stable market at the minute. There's a little bit of variation, I think, if you go younger or older, away from the 3-year-old point. The 1 year is actually just slightly increased at 0.1. And the older cars, sort of 5-year 80, that's down 0.6 or down £40 overall. So yeah, overall, I would say it's a fairly steady month.
So, as you say, Jeremy, it is a small drop, 0.2%, or as you pointed out, it's worth about £10, and historically the smallest for the month. So, what's your view on the conditions that are driving this continued plateauing that we're seeing?
Well, it's obviously the low supply into the market. We're seeing extremely low supply coming in, but it's well matched by low demand as well. We've seen some flattening period from around late May onwards, and it's just pretty much give or take continued through that. There are certain sectors of the market which are quite they've got a good bit of appetite for it. So some in the rental sector, etc., where obviously they're getting no new car supply. You've also got some engagement for some franchise dealers, and it's quite mixed, I guess, in some of the sort of within the car supermarket. Some of them are still quite hungry for stock and still selling quite well. But overall, I would just say it just feels like just a very stable market overall.
And I mean, thinking about obviously with that, and we obviously Darren's been on a couple of times now over the previous months, and we talk about that sort of plateauing and stable market. But we always know that behind this sort of headline figure, there's a lot of movements in there by sector, by age, by mileage, profiles, etc., etc. But can you take us through some of the trends that you're seeing in the fuel type? Because particularly, everyone's now looking at what's happening at the pumps with petrol and diesel, what's happening in the world of EV and hybrid. What's happening by fuel type now this month?
So we're still seeing some split in terms of the ICE vehicles, if you like. So diesel's gone down at 3-year point 0.4%. Petrol's gone down 0.1%. That's a continuation for the last few months with certainly diesel and petrol, where they've been splitting away. I think the interesting point at the minute, or the things that we've picked up on, is the AFEs. There's been a real increased activity and performance and value rising within the AFEs. So we've seen electric go up this month 0.7, hybrid HEV, so normal self-charging hybrids, they're up 0.9, and plug-in hybrids also up 0.9. So there seems to be some real desire from the retail consumer based on the fuel costs and potentially cheaper running costs within the newer technologies. So consumer inquiries are up, dealers are buying them, and there seems to be some hot competition in the market for them. So that's led to the increase in the higher values of that side of the market. It's just the diesel seems to be just dropping ever so slightly. It's dropped, let's say, down 0.4, down £40 overall. So not a massive drop. Petrol's only down 0.1, as I said, and that's actually only £4. So it's negligible for some of the ICE vehicles. But again, it's just the AFEs which seem to be just performing that much better.
And do you think, just on that petrol and diesel, I mean, obviously we, as you say there, with whatever's going on in terms of pump prices, but availability must be playing a part that's still keeping those vehicles
Absolutely, yeah.
strong into it. There's no product, is there?
No, definitely not. And I think that there's no product for little product of everything, but there's even less product for the AFEs. So I think when consumer inquiries are up, dealers are looking to buy them. From what I understand, there's been some really hot competition, and I think that's going to be here to last for a little while, because obviously there's low supply for the market into the last 2 or 3 years of certain types of product, but not, like I said, not only everything, but it's definitely leading to some real desire for those cars, which is fascinating to watch, to be honest.
And Jeremy, what about trends by sector? I mean, I did notice that it wasn't a particularly strong month for SUV values. What's your take on SUVs and some of the other sectors? Did anything stand out?
Yeah, so SUVs have dropped 0.7 overall. That's down around about 125 quid. That is more than most of the other sectors. It's actually the fastest moving sector down, the highest moving sector down. A large SUV down, if you break it down by sort of size wise, large SUVs down 0.9, and both medium and small SUVs are down 0.6, so not quite so heavy. But obviously, SUVs make up a large proportion of the used market, and there has been some stock for certain brands around there, so that may have had a bit more of an impact. But obviously, the running costs, I think, for some of those vehicles, if people have been very cost conscious in a minute, I think that's probably just led into that just dropping slightly more than any of the other sectors. Interestingly, convertibles are up 1.3%, which is quite unusual for late in the summer. But we're seeing, obviously, with the hot weather we've had, we're seeing a real desire for some of those, but they are far and few between in terms of volume into the market as well. And all the other mainstream sectors, they're marginally up or marginally down. It's a very mixed picture across them, but 0.2% up for city car, lower mediums down 0.1%, super mini down 0.3%, and MPV down 0.1%. So again, negligible moves in terms of percentage and pounds. So again, I think it just highlights it's quite a stable market across everything, really. Even SUVs to a certain degree compared to where we are in the market.
Yeah, interesting what you were saying about convertibles, because that is very seasonal, and I should imagine with the good weather we're having, there's going to be even higher interest in used convertibles at the moment.
Yeah, for sure. It's a bit of they've been sort of immune to it. Obviously, they had the big rises through COVID, where I think people were looking to reward themselves through certain parts of it, and they seem to have flattened off a little bit and dropped down, but they've picked back up again. So everything comes in for such a high point, but especially convertibles. But yeah, there's people out there buying them and paying good money for them.
And it's interesting you say that, because normally, as you say, that coupe cab and convertible market, you do get that dip in the winter months for obvious reasons, and then you get that acceleration in the first quarter of the year. But as everything at the minute is being so unseasonal, these rises are fairly, as you pointed out, fairly late to the year, aren't they, for both them sectors?
Yeah, definitely. And I think you don't usually stock convertibles so late in the summer, but maybe they've just become, like you say, more unseasonal, as we've moved in through this unusual time, let's say. So yeah.
And just before we sort of think what the dealers are saying, and looking at the other age points of the results, I mean, the 1 year 10 showed an increase of 0.1%. So that's obviously showing the strength in that sort of 0 to 12 sub 10k market. But the 10-year-old market and 100k it seems to be, albeit monetary terms probably very low in terms of money terms, but seems to be under a bit of pressure.
Yeah, it's definitely in the older vehicles, certainly the high mileage vehicles, maybe some of the older diesels, even petrols and what have you. I think that's where the pressure has really come in the market, and I'm not necessarily sure there's a real desire to stock up those vehicles. I mean, it's dropped 2.1% across all sectors at that 10-year point, but like you said, in monetary terms, that's only £83. So it's minimal for a 2.1% move, but again, it sort of varies across sectors as well. So, but overall, nearly every sector. It's only interestingly only coupe cabriolet, which is just more or less level, or zero point 0.4 increase at 10-year one. Every other sector has dropped between 2 and 3% overall.
Yeah, but we are starting to see that 0 to 12 out with the impact of shortage of new vehicles coming into the market and demand for that nearly new product now showing in that sort of strength of, well, I think there's only one sector, and that's SUV, that is actually SUV, sorry, and I think executive has dropped marginally, hasn't it, in that sort of 0 to 12-month market.
Yeah, it has. I mean, we're seeing there's some good competition for some of those cars. We know the rental markets. It's the lifeblood for rental at the minute within the used sector, with the lack of new vehicles around and likely to be for the foreseeable future, for certainly for the rental sector anyway. Whilst OEMs and dealers are prioritise the retail, and they've got a lot of orders to match as well still within that sector. So it's going to be interesting to see how the younger vehicles play out. I can see it sort of seeing that being more stable overall than maybe some of the older sectors when we get past the 3-year point. But yeah, I think it's there's some franchise dealer activity there as well, where for some brands they know they're not going to get vehicles, and I think used is definitely very much where they can make money at the minute, to fill spaces and continue to sell and make money and regurgitate part exchanges and what have you.
Yeah, and just talking about dealers there, and you Cap HPI and yourself speak to the dealer network a lot. What are they telling you now about their sort of month on month stock levels and consumer demand? We see what's happening in terms of the consumer confidence index and everything's happening at consumer market. But what are the dealers telling you about their sort of stocking levels and consumer demand now out in the marketplace?
Well, I think stock levels remain fairly consistent depending on who you speak to. I think there are some lower stock levels around because of the rise of interest rates. The stocking levels, so stocking, to price to stock vehicles is obviously more expensive. So it remains quite consistent month on month. And I think they're only buying to replace the sold units anyway. So being very picky and picking out, some of the vehicles, the vehicles or replacement vehicles that they've gone and sold. But I mean, consumer demand has just been described as just okay or actually good for the time of year, but they're obviously not. There's obviously some which are not doing quite so well for whatever reason. So it's a very mixed picture, I would say, across the board. But it's I would say it's fairly positive for the year. It's muted comparative against budget and plan, but bringing through the summer holidays, it could be, we could see a slightly lower expectation and the sales rates going through, I don't know, I guess the next 6 or 8 weeks, but that will be interesting to see what happens.
And Jeremy, as you say, we're now into summer holiday season. Demand inevitably will drop, but how do you see that affecting values over the next couple of months? And we always put Darren on the spot at this point of the podcast and ask him to dust off the crystal ball. So what's it actually telling you? What do you think? How do you think it's going to pan out?
Yeah, well, we think it's probably going to be similar to what we've seen over the last couple of months with the low supply. Yes, it's probably going to be a slightly more muted retail activity, consumer activity potentially, because everyone's on pent up holidays and not been away for 3 or 4 years. So we're likely going to see a little bit of a lesser sales rate. But I still think there's, with the supply and low supply and low demand, I think we're likely to see something very similar month on month, probably for the next good few weeks. Dare I say it, maybe a couple of months into September. And I guess then when the new registration month kicks in, we don't know what that will bring, because that will vary, hugely, I guess, for different OEMs. But, overall, I would say we're probably going to see some more stability, which is, overall still a very strong position, year on year or year to date.
Yeah, it's quite interesting to say that, isn't it? Because at the minute we've kind of got it a bit muted with holiday season, and we know we've seen what's happening at airports and the sort of borders. But like you say, we're in this risk where if consumer confidence does return and demand does return to higher levels, then if supply remains as it is now, and September does not change that marketplace, then we could be in for an interesting third and fourth quarter for the year, couldn't we?
Absolutely, yeah. I mean, it's the $1 million question of what happens after September, and with the OEMs we speak to and some of the dealer groups, it's still very much in the dark in terms of what's going to happen. And some people say we're not going to have any supply. Other ones say, well, we might be okay, but that changes from week to week or month to month. So it's going to be very interesting to see what I guess the rest of this quarter will bring, and certainly what Q4 will bring.
Yeah, and I think, as always, with Darren always gets the point in that this is now more about live. Things are changing daily, weekly, aren't they? You can't now wait a month to try and understand what is happening in the marketplace, because, as you say, things are changing quicker than that now, aren't they?
Absolutely. I think the overall move of 0.2 doesn't really tell the whole picture, because as we've just gone through in terms of the varying fuel types and what have you, there is a split in a lot of things, and it can range from different by manufacturer, by model, etc. So live is key to getting those up to date movements, and being in tune with the market, the here and now, and those values will change daily. So it's definitely live is definitely the way forward.
Yeah, I mean, there's lots going on in there, and I think for me, it's I know Curtis and I appreciate you and Darren coming onto the podcast to sort of give context behind some of these headlines, because I think they can be not necessarily misleading, but they don't tell the full story of what is happening in the marketplace, as you say, by fuel type or by sector or by age profiles. There's so much variance, and you made the point earlier that that coupe cab market, that for many years we've watched it decline and increase at certain points of the year. That's now changed because we're in an unseasonal market because of what's been happening over the last 2 to 3 years now. So no, it's appreciated you coming on and talking us through this, Jeremy.
No problem at all. Thanks for having me. And it's great to go through the movements of what's happened. It's been fascinating to watch, and will continue to be fascinating, I'm sure.
Well, many thanks from Curtis and I for coming onto the podcast, as I say, Jeremy, and giving us a sneak preview of July key trends. Just a reminder to the listeners this morning that the latest editorial is available for you to view and download. It was available at 7:30 on the 27th of July. So if you are listening on demand, it will be there available for you. And that's at the CAP HPI website. So that's cap-hpi.com. So many thanks for joining us today for this special weekday podcast. We're back with the industry headlines on Saturday. Until then, it's goodbye from us, and thanks for listening.